Hello students. So today we are going to discuss national income aggregates. Now this is one of the most important topic in class 12. So starting with national income aggregates, first we need to understand what national income is, right? So national income is the monetary value of all the final goods and services produced within the domestic territory or outside it by the normal residents of that country during a particular period of time. So what you need to understand, what are the aggregates, what are those terms used in calculation of national income, right? So first is GDP at market price. So what is GDP at market price? It stands for gross domestic product at market price. We'll be studying in details in the next videos, in the upcoming videos, about what is it, what are the definitions of GDP and all. The next aggregate is GDP at factor cost. So you see there are similarities. Okay, it's GDP at market price, GDP at factor cost. Similarly, we have NDP at market price, NDP at factor cost. So these are categorized in one column because all these are domestic incomes, right? Gross domestic. D stands for domestic, and MP stands for market price, FC stands for, FC denotes factor cost, right? Now the next we have the fifth one, that is GNP at market price. Sixth, GNP at factor cost. 7, NNP at market price, and 8 is NNP at factor cost. So again, if you see carefully that we have nationals, so all nationals. So in center you see D, out here you see N. So what I would like to do is highlight this. So you see D domestic, and out here if we see national N. So this is the difference between these two columns, right? So all these are domestic aggregates and these are national aggregates. Now we are going to study how these are related to each other. Okay. Okay. Now next slide. So first thing that you need to keep in mind, that there are three connectors. So what are those three connectors? Number one, depreciation. Now depreciation is also known as consumption of fixed capital, capital consumption allowance. In fact, it is also replacement cost. So these are common but alternative names of depreciation. The second connector is net indirect taxes. Net indirect taxes means indirect tax minus subsidies. Right. And then we have net factor income from abroad. That is NFIA. Right. Now, what is net factor income from abroad? In details, we are going to study. But as of now, we will be seeing what it comes from. That is a difference of factor income from abroad minus factor income to abroad, right? So importantly, you have to again see the keyword out here. It's factor income from abroad, factor income to abroad. From is what domestic country receives, okay, the residents receive, and to is what the domestic country is paying abroad. So the main difference is from and to. Remember, in short we can write, it's FIFA. We can use the word FIFA, easy to remember. FIFA minus or subtracting theta, FITA. So it's very simple to remember. Net factor income from abroad is FIFA minus theta. Okay, it's just easy to remember. So remember, these are the connectors. Okay, so these will be used to understand how you can get one aggregate from the other aggregate. Okay, so quickly let's understand how these connectors will be used to get one aggregate from the other. Okay, now for example, so if we have the value in gross, okay, and we have to get in net. So what we are going to do, we are going to subtract. Okay, I'm using red color for subtraction. Red is for subtraction, that is subtracting depreciation. Okay, so subtraction of depreciation from gross to net. But if you want to get from net, you want to get, gross, so we are going to add depreciation. So you are going to add depreciation in net to get gross. The second one, if we have market price, so in order to get factor cost, or you can say, like if we are writing full form, factor cost. So what we can do is we can subtract net indirect taxes, NIT. But if you are going to get market price from factor cost, what we can do is we are going to add NIT. So remember, okay, so I'm using green color for addition and red color for subtraction. So you can easy, you can understand it, and you can visualize that from gross to net we are subtracting depreciation, from net to gross we are adding depreciation, from market price to factor cost we are subtracting net indirect tax, from factor cost to market price we are adding net indirect tax. Now similarly, if one more connector, and that is, suppose if we want to get from domestic value, a value in domestic terms, like GDP, so D is that domestic, we want to get NDP, from GDP to NDP, that not this, from GDP to GNP. So if you want to get from domestic to national, GDP to GNP, so you have to understand this word. So from domestic to national, what we are going to do, we are going to add NFIA, that is net factor income from abroad. If you are going through book, any book by like whether it's CBSE or ISC or any state board or any board, you may find NFYA in your books. So nothing to worry, that Y denotes income, so it's NFIA or NFYA, it's same thing. So you are going to get domestic to national. So if you want to get from domestic to national, net factor income from abroad has to be added. But if you are going to get back from national to domestic, so you are going to subtract NFIA from national to domestic. So I am giving you one example for each for a better understanding. Let's take this one, from gross to net. Say GDP at market price to NDP at market price. So you see the difference from D. So you see the difference from gross to net. What has to be subtracted? Depreciation has to be subtracted. In this case, suppose we have NNP at say market price. From this we have to get NNP at factor cost. So again you see the difference, MP to FC, right? So what we are going to do, we are going to subtract NIT. Last, if we have NDP at factor cost and we want NNP at factor cost. Now remember, NNP at factor cost is aggregate to denote national income, which is to denote national income. NDP at factor cost to denote domestic income. So from domestic to national, we are going to add NFIA. So keep in mind that from domestic to national, we are going to add NFIA. So these are the basic, connectors. These are the aggregates. So aggregates and how they are connected with each other, I hope it is clear. Now a task for you, I am giving you two simple questions in the form of fill in the blanks. Write at home. Okay, so you have first blank, you have to put one of the connectors, whether it will be depreciation or NIT or NFIA. Similarly, there are two blanks, you have to make a choice which two connectors will be there. Okay, so practice this. All the best. See you in the next video. Thank you.